Continue. So we were discussing that the importance of the audit, and then as a third point, we have that to do a better decision, to take better decision. I mean, we know what are the areas in which the company needs to improve. And when we know that the financial information reflects the reality of the company, because an external part has reviewed the financial information, the shareholders or the management could take better decisions. So basically, these are the three three points that explain why the audit is important. But obviously, we can have more than these points, no? But basically, these are the main points. But we have a lot of benefits with auditing. Okay. So, then now we review what is an audit, what is the importance of an audit, what are the benefits, and now let's check the types of audit. Audit, as I said, are divided into main areas, where one is external and the other is external. But what is the difference between them? So the first difference between internal and external, basically both is we both review the company, no? They are the other eyes in the company. But external, the objective of external audit is express an opinion of financial statement. I mean, external try to say if the financial statements of a company reflects the reality, the economic reality of the company. So basically, this is the goal of external audit, to say that if financial statement reflects the economic situation of the company. In the case of internal audit, is analyze and improve internal controls. I mean, if the company is following the politics and procedures, and if the company has a very strong controls, and if the company doesn't have this strong control, how the company could implement these controls in the company. The second difference is the moment. I mean, external audit is based in the past, in a certain times, because as an external audit try to review the past, try to review the figures in the past. Normally, if you have seen financial statements, you at the beginning of the financial statement, you can find the date, and the date is normally 1 year previous to in which we are reading the financial statement. So basically, because we as an auditor, we will review the past events of the company. And in the case of internal, is the present and the future, because if they review the processes in the present, they could detect deficiencies and improve or change this control, and or detect this deficiency and try to eliminate it, to what? To get a better organization, to get a better company. So basically, internal is in the present to improve the organization, the efficiency, the incomes, the profits of the company in the future. Another difference is the audience, because the result of the work of an external auditor is financial statement with an opinion. So this opinion, these financial statements that says that the financial statement were reviewed by an external auditors, helps to investor or the general public and the regulators. But in the case of internal audit, it's not for the public, it's not for this investor of the shareholders. The internal audit is only for the board of directors and the executive management, in some cases regulators, because for example, in banks, in banking regulation, sometimes they ask that the bank needs to have an internal audit. So sometimes internal audit helps to regulators too. But remember, the audience for the external is investors and shareholders, external parties, and internal is the board of directors of the company and sometimes regulators too. And the fourth difference is the frameworks used. In external, we are going to use internal audit standards, or you can call them ISA, and in the internal part, we are going to review, or we are going to follow internal professional practice framework and or internal policies and procedures. And the number 5, the difference number 5 is the personnel. I mean, in external audit, normally the audit is contracted by the company or the holding or the financial group. I mean, the external auditors are employees in another company, normally an audit firm. But in the case of internal audit, the internal audit, the employee belongs to the organization. Even when the internal auditor is reviewing the organization, the employee belongs to the organization. And this is very important. Both of the audits strengthen and protect the value of the organization. So I feel that this is a most important part in the external and the internal audit, because they are protecting the value of the company. Okay, now we are going to check the international frameworks. But before to follow, did you understand these two parts of the audit? It's clear for you the difference between of them?
For the personnel part, is it must be the company or financial group or holding be the personnel? And also, is it also restricted to the employee of the organization to be the personnel? Any other personnel can be, can be included in the personnel here for internal audit.
You mean that if the internal audit is hired by the company?
Only a person, the employee of the organization, can we top up to upper management if not only the employee of the organization, maybe up to upper level, just like the external one. Can if the holding or the financial group is a group of people or rather than employee, can we just because of the personnel here, we say that it is internal or external? Because I'm looking at your PowerPoint, the external is a group, a group of person from a company, but from the internal, we just say that it's for an employee of the organization. Is it just just these two difference? We can say that it is internal or external audit.
Yes, basically, for example, in external, the external auditors are a firm. These firms, KPMG or PwC or Deloitte, it means that the personnel is external. This personnel is not of the company that the auditors review. So, I mean, the financial group sometimes, for example, the auditors are reviewing a company for which who decided that this auditor reviewed this company, probably the holding of the organization or a financial group, or directly the organization, but at the end is always an external party. But in the case of internal, it's an internal part of the company. I mean, the company hired these auditors, but the only difference is that the internal audit doesn't belong to the area in which the auditor is reviewing. I mean, if the auditors is reviewing, for example, the accounts payable, obviously the auditor cannot be part of this area of the accounts payable area. Yes, it's part of the organization, but it's not part of the area. Yes, this answer your question?
Yes, I got it. Thank you.
Okay. Next. Okay, these are of international frameworks. One is the International Auditing Standards, and the other is the International Professional Practice Framework. These are very different, but at the end, they are kind of guides that help to do the auditor's work. So what are they? The first question is, what are these international frameworks? In the case of the International Audit Standards, it's a set of standards issued by the International Federation of Accountants, which allow the external auditor to develop a professional work with high quality tools recognized worldwide. I mean, the first difference is that the organization that issues the International Audit Standards is the International Federation of Accountants. But in the case of International Professional Practice Framework, the issue that emitted this guide is the Institute of Internal Auditors. And both as I said, both help to have help to develop a very good audit independently if it's internal or the external. Both are guides to help to the auditor to develop its work. And what are they important? The International Auditing Standard is very useful because it creates a common language between auditors. I mean, if using the international audit standards in an audit, this audit could be read for another auditor in another country. I mean, this international audit standard helps to harmonize all the work made by the auditors. And in the case of international professional practice framework, in the case of internal audit, helps to the internal auditor to develop a more systematic and disciplined approach to evaluate and improve the effectiveness in the risk management. I mean, yes, it could be a common language, but the main objective of international professional practice framework is to detect how the company could be more efficient through improving internal controls. And the other difference between these two international framework is the structure. The structure in the international financial auditing standards is 32 ISAs or 32 rules divided in 8 series. So each series contains a specific topic. For example, the series number 200 is for the concepts of audit, of auditor, concept of the team, concept of the engagement of the audit. So basically, this structure, every series contains a specific topic. So remember, 32 ISAs divided in 8 series. And in the case of international professional practice framework, is divided into groups. The first is the attribute standard that focus more on the requirements that the organization and the individuals inside the company needs to comply, and performance standards that provide a quality criteria against which the performance of these services can be measured. So these are the two divisions in the structures of the international professional practice framework. And in the case of the ISAs, international audit standards, they are mandatory. I mean, all the external auditors needs to know the international audit standards and needs to follow them. So this is mandatory for the external auditors, but in the case of international professional practice framework, is not mandatory. I mean, if the company decided to use this framework, it's fine. But if the company said, okay, I'm not going to use this framework, it's fine too. I mean, it's not mandatory. It's not something that could be punished by the law or by the government. But in the case of the ISAs, yes, we need to, as external auditors, we need to know this framework. And okay, now is 11:01, so let's stop here. Let's take a break of 10 minutes, and then we can continue with this slide. So let's see. Let's come back in 10 minutes. 11:12. We can start again. Okay.
Okay. Okay.
In the case of professional, the code for accountants, specifically the name Code of Ethics of Accountants is issued by the International Federation of Accountants, and the Code of Ethics of the Auditor is emitted by the International Institute of Audits. So, but in general terms, it contains the same. So it's the same. The only difference is the organization that emit the codes of ethics. But basically it's the same, both of them. So the most important parts in the code of ethics is 4 points. And the code of ethics says that an accountant or an auditor needs to have integrity. It means basically the accountant or the auditor needs to be honest to comply with the professional duties and to have good relationships with their clients or with the management. So one important element to be ethic is integrity. The other thing is objectivity. It means that we cannot let to have a conflict of interest. Imagine if you are part of the board of director in a company, and at the same time you are the external auditor, there is a conflict of interest, because on one hand you are part of the company, so you have the power to make the decisions, and on the other part, if you were external auditor, you will say that obviously you will say, okay, my company is perfect, the organization is perfect,